I remember 2 years ago at this conference being asked by one of the people in the audience when gold was finally going to move. And you know, Trey, I scratched my chin sagely and I said, I think gold's going to move in the year 2000. Mm-hmm. It's up 9% compounded for 25 years. Mm-hmm. People's expectations, I think, were inflated as a consequence of the decade of the 70s, and the fact that an asset class was up 9% compounded didn't register to people as a move. 50%, now people are getting interested, and the consequence of that is that they have the courage to make other projections.
Rick Rule, a titan in the natural resources sector, recently shared his views at the 2025 Rick Rule Natural Resources Symposium. Known for his keen understanding of market cycles and long-term trends, his insights are highly sought after by investors worldwide. We'll explore his thoughts on what's next for gold, silver, and other critical commodities, providing you with a comprehensive overview of his strategic thinking.
The gold price was up, I think, 27% in 24, and so far in 25 we're up another 26 or so. We were up 35 when we touched 3,500. Yeah. This is I sort of know what your answer is going to be, but I have to ask, are you surprised that the gold price is doing this well this year after doing so well last year?
I'm not, because I was surprised that gold hadn't moved further, faster, earlier. Mm-hmm. My belief, and Trey, you and I have discussed this over dinner, mm-hmm. My belief is that gold does well when people are concerned about the maintenance of their purchasing power in US dollars. I've been concerned about that for a very long time. Mm-hmm. The arithmetic that concerns me is not expressed by the CPI, which I don't think is a good index. So I've been surprised by the muted response of gold hitherto. Mm-hmm. I didn't know, as you know, because we talked about it, when gold was going to move. Mm-hmm. But it seemed to me like an inevitability. Mm-hmm. As you and I both have talked about, I have a flaw in that I often confuse the words imminent with inevitable. Mm-hmm. But no, I haven't been surprised at all.
Mm-hmm. And I know that you're fairly focused on debt and the macro situation. Do you think that the dollar standard system has already begun evolution to a new global monetary reserve, or is that overstating it?
I think it's way overstated. Mm-hmm. When I talk about the deterioration in purchasing power of the gold, I'm talking about in an absolute sense, not in a relative sense. I think relative to other currencies, gold will do well. Mm-hmm. Franz Pick said there's a lot of ruin left in a country that's great. Mm-hmm. Ruefully, I agree with that. I believe that gold will be the world's reserve currency for the balance of my life. Mm-hmm. For the record, I'm a healthy 72-year-old. Mm-hmm. But I think its hegemony will reduce. When I look at
the dollar's hegemony,
yes, mm-hmm. It'll be reduced. Mm-hmm. I think the U.S. government is doing their best to destroy the U.S. Treasury as a savings instrument, politicizing it, debasing it. Mm-hmm. But what are the alternatives? Our friend, Doug Casey, once said the dollar is an I owe you nothing, but the euro is a who owes you nothing. And I mean, the other analogy is the prettiest mare at the slaughterhouse. I'm not concerned about the dollar relative to other mediums of exchange. I'm worried about the dollar as a storehouse of my own wealth. I personally, Trey, I'm telling this to your audience, you know this, I personally save in gold. I personally maintain liquidity in dollars. Those are two different statements.
Mm-hmm. Very similar to Grant Williams. He was saying the same thing when we discussed this in terms of, is there a target where you would sell your gold? And his answer was, when there's something I want to buy with it, and I think it's a good value, which is an interesting, simple.
That's precisely what happened to me in 2010. Mm-hmm. Now, I didn't catch the top. I never do. Mm-hmm. But there were other circumstances where stuff appeared to be much cheaper. The mm-hmm. consequence of that is that I made the swap. I do consider gold to be a form of liquidity because I've proven to myself over 40 years that when the time comes, I'm not psychologically indisposed to selling it. Mm-hmm. One of the things I do, which I think your audience might find of interest, is that beginning in the year 2000, that was a momentous time, and I had a discussion with myself. Where did I want to go? What did I want to do? Mm-hmm. One of the things that I began to do was to keep an informal alternative ledger in gold. Mm-hmm. My net worth, my income, my expenses in gold, mm-hmm. Rather than in the US dollar. And for that part of my ledger, when I look at what things cost today, I wish I'd been all in gold. Some stuff like rooms at this hotel, or a Big Mac, or a car, are really cheap. If you measure them in dollars, they're anything but cheap. But understanding that the dollar-gold exchange ratio was $250 to an ounce of gold at that point in time, if you equalize the numerator and the denominator, if you measure your savings in gold, you're struck by the deterioration of the purchasing power of the U.S. dollar, and you're surprised by the steady reduction in the actual price of many goods and services on a global basis if you're valuing them in a constant. It's a really interesting consciousness-raising exercise.
Rule believes we are entering a precious metals bull market reminiscent of the 1970s. He highlights how generalist investors are typically drawn to gold's momentum first, but eventually, silver takes the lead due to its lower unit cost and dramatic potential for escalation. This historical parallel sets the stage for his bullish outlook. Gold has shown impressive performance, up 27% in 2024, and another 26% so far in 2025, reaching new highs. Rule admits he's not surprised by this, as he felt gold's previous muted response to purchasing power concerns was unexpected. He attributes current interest to growing inflation anxieties and historical expectations. A key point of contention for Rule is the Consumer Price Index, or CPI, as a true measure of inflation. He argues that the CPI does not accurately reflect the deterioration of purchasing power, citing examples like rising gasoline, mortgage rates, and grocery costs. He humorously points out the discrepancies, suggesting a much higher real inflation rate than reported. Rule emphasizes his concern about the absolute deterioration of the U.S. dollar's purchasing power, not just its relative strength against other currencies. While he believes the dollar will remain the world's reserve currency for his lifetime, he foresees a reduction in its hegemony due to politicization and debasement of U.S. treasuries. He projects a 75% decline in the dollar's purchasing power over the next decade, akin to the 1970s, due to accumulated debt and unfunded liabilities. This dramatic forecast suggests a potential fourfold increase in the gold price if it mirrors this decline, challenging those who think gold has already peaked. Rule distinguishes between gold as a savings instrument and liquidity. He personally saves in physical gold to maintain purchasing power, while keeping liquidity in dollars. He even maintains an informal ledger in gold, noting how many goods and services have become cheaper when valued in gold since 2000. Rick Rule holds a special place in his heart for silver, confessing that much of his conservative investment capital was made through wild speculation in the past. He anticipates silver will once again outshine gold in the upcoming bull market, offering dramatic returns when generalist investors enter the precious metal space. He describes silver's past performance as truly dramatic, recalling the 1970s when silver went from $1.30 to $50, and stocks like Coeur d'Alene saw incredible surges. This deep historical experience fuels his desire to experience another quantum escalation in his career, seeing silver as the primary vehicle for this. Rule recounts his personal involvement in spectacular silver markets in the late 80s and early 90s, where stocks like Silver Standard and Pan American Silver went from under $1 to $45. He believes similar relative outperformance of silver to gold and silver stocks to silver will characterize the current bull market. Rule categorizes investments into three distinct buckets: insurance, investment, and speculation. Gold serves as insurance and savings, not a money-making vehicle. Gold stocks are investments, a way to increase one's gold holdings, while junior speculations are a different, more hands-on game. He highlights that gold itself requires no work, akin to a life insurance policy. Gold stocks, however, demand more effort and understanding of the business. His true competitive edge lies in speculating in junior mining companies, a craft honed over 50 years of mistakes and dedicated work. For speculative investments, Rule advises investors to limit the number of holdings to the number of hours they're willing to work on due diligence each month. This means reading quarterly filings, proxy statements, and resource reports, rather than just acting on a hunch. He's graded thousands of portfolios and seen the consequences of insufficient work. If you found this information valuable, please hit that like button, share this video with fellow investors who might benefit, and subscribe to our channel for more in-depth analyses and market insights. We eagerly await your comments below. Let us know your thoughts and what topics you'd love for us to explore next.